We're talking gold today with Adrian Day, one of the speakers at the New Orleans Investment Conference and the author of the recently published Investing in Resources. We asked Adrian, will we see a correction in gold anytime soon?
It seems to me that gold and silver are a little bit ahead of themselves. They've both, if you look at a graph, they've both gone above trend. I'm not a chartist, I'm not a technician, but they've both gone above trend. So the possibility, and let's say even the probability, of them correcting at some point back towards trend is really quite high. And for gold, that means as much as $150. I'm not saying that's necessarily going to happen, but that's the sort of potential. So I think the potential for that kind of correction is definitely there, and particularly if there's any kind of enthusiasm in the markets, perhaps after the elections next week. Having said that, I'm certainly not shorting gold, and I'm being very, very cautious about even trimming it, because an awful lot of people were looking for corrections back at 950 and at 1050 and at 1200, as you know. 1200 was the ceiling, and it was going to go back to 950, and it never happened. So I'm a long-term value investor. That's what I am. I'm not a short-term trader like some people. I'm a long-term value investor, and as such, I really try not to market time too much. If I want to be in gold for the next 3 years, I will be more aggressive in buying or less aggressive in buying, but I'm certainly not going to sell my gold and find I've missed out on a rally. Generally speaking, what happens is you've heard the old Wall Street saying, buy the rumors, sell the news, and we've seen that many times. I think people are probably going to find that the Fed's much anticipated announcement is actually not as exciting as it's been anticipated to be. And that often happens with things. So I think we could see a sell-off based on the fact that, is that all it is? Or But I think longer term, I think any pullback in gold is an opportunity to buy more, frankly, at this point. And I don't normally say that because I'm not I manage money for people. I'm very conscious, even though I'm a long-term value investor, I'm very conscious of quarterly returns. You have to watch what's happening. But I think any correction is a time to buy more, because over the next several years, as currencies, paper fiat money loses its value, loses its intrinsic value, loses its purchasing power, and of course the dollar is the biggest loser, I think. Gold is the beneficiary. Gold is a clear beneficiary. I think that the point is not Apple. The point is, if you can identify a major long-term trend, you want to stick with that trend and avoid being too clever in trying to time it, and certainly avoid being panicked out. I mean, we all know, of course, about gold in the 1970s, how from 73 to 74 it had a 50% correction. That was scary at the time. Similarly, a lot of people were selling their resources at the end of '08 because of what happened with the credit crisis. But if you believe in a long-term story, which is an enormous growth in demand from China, led by China, and a difficulty of major companies to meet that demand with new resources, then you want to ride out those corrections, and indeed use any correction that comes as an opportunity to buy more, but don't be panicked out. If you believe in a long-term story, you must stick with that story. And I believe it's a 3-5 year story.
Stay tuned to Kitco News on Kitco.com for more coverage from the New Orleans Investment Conference. For Kitco News, I'm Daniela Cambone.